Tesla just lost over $150 billion in value in one day. Elon Musk's personal net worth plummeted by more than $30 billion. And the root of the chaos? A very public war between Musk and Donald Trump. What began as a disagreement over tax policy has now exploded into one of the most consequential feuds in recent business history. This isn't just about politics, it's about markets, investors, and the future of tech in America. Here's how this Musk-Trump showdown is rocking the economy, and what it means for your money. Part 1. From Allies to Enemies. Just months ago, Elon Musk and Donald Trump were aligned. Musk was a major voice in Trump's second-term economic plans. He served as a high-profile advisor leading the Department of Government Efficiency, nicknamed DOGE, a nod to his meme coin roots. Trump praised Musk's vision and even hinted that Tesla and SpaceX were symbols of American greatness. But that relationship crumbled when Trump introduced what he called the One Big Beautiful Bill, a sweeping economic package meant to boost growth, cut taxes, and rein in federal spending. The catch? It included a total elimination of electric vehicle subsidies, long considered a key support for Tesla's competitive pricing and growth. Musk publicly slammed the bill, calling it fiscally reckless and a direct attack on American innovation. Trump fired back, labeling Musk ungrateful, and strongly implied that his administration would start reevaluating government contracts awarded to Musk's companies. The situation spiraled quickly, and Wall Street took notice. Part 2. The market reacts. Almost immediately, Tesla's stock took a nosedive. The company lost 14% in market value, over $150 billion, within 24 hours of Musk's comments and Trump's threats. Elon Musk personally lost more than $30 billion in net worth that day, one of the largest single-day wealth drops in history. It wasn't just Tesla. Other EV stocks like Rivian and Lucid also fell sharply. Battery suppliers, green tech ETFs, and even chip makers tied to the EV ecosystem saw declines. Investors began questioning how safe their capital is when companies become politically exposed. And the message was clear: political risk is now business risk. Part 3. What's at stake for Musk's companies? This feud isn't just personal. It's potentially catastrophic for Musk's empire. Let's break it down. Tesla relies on federal tax credits to make its EVs more affordable. Without them, Tesla loses its price edge. SpaceX, which has billions in contracts with NASA and the U.S. military, could see those contracts frozen or rebid. Starlink, Musk's satellite internet network, is under FCC review for expansion and could face roadblocks. Neuralink and the Boring Company, which also depend on regulatory approval, now face uncertain futures. What's happening isn't theoretical. Government friction could translate to real losses in revenue, opportunity, and investor confidence. Part 4. The politics behind the clash. This is about more than electric cars. Trump's base has shifted focus, favoring oil and gas jobs over clean tech. He's leaned into anti-elite, anti-Wall Street messaging. And Musk, despite his massive following, is now being portrayed as part of the globalist tech class. Meanwhile, Musk has become increasingly vocal. He's criticized Trump for turning against innovation, warned about the economic impact of the bill, and even hinted at starting his own political movement. He's accused Trump of turning the government into a tool for political punishment rather than policy reform. Both men are using their platforms to attack, Trump from Truth Social, Musk from X, formerly Twitter. And the public battle is affecting everything from stock prices to investor sentiment. Part 5. What this means for the market. This feud reveals a bigger truth. The stock market doesn't just respond to earnings or interest rates anymore. It reacts to politics, personalities, and power struggles. We're seeing increased volatility in tech and green energy stocks, investor concern over regulatory retaliation, greater scrutiny of companies tied to government funding. This could set a dangerous precedent. If CEOs fear that political dissent leads to financial punishment, they may stay quiet, or worse, make decisions not based on business, but on survival. It could also trigger long-term changes in how companies navigate Washington, D.C., spending more on lobbying, legal defense, and compliance, just to avoid becoming targets. Part 6. What comes next? Here's what to watch. 1. Federal contracts. Will Trump actually move to cancel SpaceX's deals with NASA or the Pentagon? Second, EV market response. Will consumers react if Tesla raises prices without subsidies? Third, congressional hearings. Lawmakers are already proposing hearings on EV tax policy, and they may drag Musk into testimony. Fourth, investor behavior. Big institutional investors may begin reducing exposure to companies entangled in political risk. 5. 2028 election rumors. Will Musk step into the political arena directly? Some sources say he's seriously considering it. This feud is far from over. And for investors, it may be the beginning of a new era, where political alignment becomes part of financial due diligence. Final thoughts. The feud between Elon Musk and Donald Trump isn't just a headline, it's a warning. It shows how quickly politics can upend business, how fragile market trust really is, and how billion-dollar companies can become pawns in a power game. In the past, markets reacted to earnings reports and Fed rate decisions. Now, they react to tweets, ego battles, and campaign agendas. This is the new reality, and it's one we all have to navigate. If this breakdown helped clarify what's going on behind the headlines, subscribe to Finance-Related 101, where we turn global financial drama into clear, practical insights for everyday investors. Thanks for watching. Stay focused, stay informed, and, as always, stay financially aware.